So good afternoon to you on the East Coast, and good morning to, I think we have a few people on the West Coast. Thank you for joining us today. We will be discussing the provider relief, and clearly what I think most of you are interested in is reporting in the portal. We've been fortunate to help a lot of clients so far. We've been in the portal. Really our goal, my goal today, is to spend about 20 to 25 minutes walking through each of the sections within the portal, sharing with you some of the lessons learned and strategies for the reporting that we've learned along the way. And then I think the real big thing here is open it up to discussions and questions. So again, I'm hoping 20 to 25 minutes of just going over some of the material. Again, don't try to write it down. All the material is here. It'll be sent out, or it's in the toolbar right here, and then we will open it up for discussions and questions, as there's many of them that are out there. So with that, let's begin. So I think this is a really important opening slide. Every one of you who received funds, either one payment of provider relief, or many of you received 2 or 3 even, that you all signed attestations. And per that attestation, it clearly states failure to report or other non-compliance with terms and conditions, HHS has the right to recoup the funds. Now, along with that, it gets into a little bit more serious detail around if there's any deliberate omission, misrepresentation, falsification, etc., punishable by criminal, civil, or administrative penalties, including but not limited to really pulling of your Medicare billing privileges. So, anytime the government puts out some $150 billion, clearly there's going to be strong language around this. There has been articles out on the Attorney General, and there will be some reporting and some auditing post all of this reporting. So one thing I always like to say is up front, you don't have to supply the information in the portal, but you need to keep your books as though you are going to get audited. Very important. So we put this slide in because there's some hyperlinks here for you that I think is really important. There's a great portal user guide. There's a data entry worksheet that really shows you the type of format so you can gather all your data in advance. We'll share some of that today also, but so you can make sure that you have all the data you need in advance, so when you go into the portal, you can have it in the format you're looking for. And I should have said this up front. Probably the most important thing to do if you haven't already is to register. If any of you have not registered yet, it takes about 15 minutes. A lot of the basic information, the key we always say is whatever email is put in and registered will be the email that receives all the correspondence. So very important, if you are the one responsible for the provider relief reporting, make sure you put in your email address, because you will be getting all the correspondence along with an email back when you submit the information. So I thought this was really important. Everyone on this call probably has seen this, understands it, but the biggest change that came about on June 11th at 4:30 on a Friday afternoon, leave it to the government, it was this reporting guide that came out. And basically what it says is every provider relief payment that you received stands on its own. And what it means is it's based on the date of receipt. I would assume the majority of you that are on this call received something within period 1. So any funds received from April 10th to June 30th, as you are aware, you had up until a little over a month ago to use those funds. So the deadline was June 30th. The reporting, always 90 days after, is September 30th. Many of you, though, then received additional payments in the second half of 2020, and it goes up by increments of 6 months. So you'll have till the end of this year to use those funds, reporting March 31st. Some of you that received phase 3, it came actually in 2021, so you would have until June 30th. The reason I left period 4 blank, and this is really interesting to me, is this, when they put this out, it opens a door to allow for more provider relief funds to be released. And I'll talk about that a little bit more today, but clearly this is allowing for any payments coming in the second half of this year and the reporting timeline on that. there was $174 billion approved in the CARES Act. Depending on who you speak to, there's some 20 billion to 24 billion still left. And some of the information that they're asking for in the portal that I'll talk about a little bit leads you to believe that there could be another distribution of funds, especially with what's been happening lately with the Delta variant. So what I'm going to, the next 5 or 6 slides is literally the layout within the portal. And I'm just going to give some high level takeaways from each one of them. I'm not going to read everything, but I will tell you what we think is important, and it'll just help you to start to get your thoughts around when you go to report on this. First piece, pretty simple. Basically what they do is they pull most of your information from when you registered. There is something they asked for what type of facility you are. They'll ask for a provider type and a sub-provider type. An example provider type is outpatient facility, subacute, post-acute, and then I'll get into more detail. If you are an outpatient facility, are you professional based? Are you primary care? Are you a specialty practice? So those are really the 2 questions they'll ask you there. The second piece, and honestly, I could do a whole presentation on this, and I don't want to get too bogged down in this because you will have my contact information and we can go through this in detail. A lot of information here. There's a lot of frequently asked questions on the PRF portal for those of you that have a lot of these different subsidiaries, but there's really 3 main things. So they ask you to report on any subsidiaries that you have that are eligible healthcare providers. Then they ask you, and this is the real one that they start to talk about, any divested or acquired. So if during this period of time you divested any facilities, you acquired any, they're going to ask you to list those. They're going to ask you to list the TIN associated with that. And then the third piece talks about if you're in a system and you have a parent, and is that parent going to report on any of these general distribution payments, because they are allowed to. Even though it went to the specific subsidiary, they can actually report on some of that. So a lot of information in here. They start to talk about the targeted distributions. We'll touch on it a little bit, but my goal here is not to get too bogged down in this piece because, like I said, we could spend a whole hour just on this. So the third section here is payments to recipients. And basically, when you go into the portal, this will self-populate. So based on your registration and based on the information you provided, it will show you, either 1, 2, 3 payments, however many payments you receive. The key here is to make sure that, yes, those are the payments you received. If those are not the payments you received, you need to stop there and call the provider support line, which I should have noted, it was probably 3 slides back, but there's a phone number you'll see to call them, because everything is predicated on that information of those provider relief funds and the corresponding dates of being accurate. So that's absolutely critical. Step 4, so it's really 3 steps here, but important information. So interest earned on provider relief payments. We've had many questions from all of our clients on, how about if it was in a non-interest bearing account? How about if we received the money and just used it right away? And what we have told everyone is, if it was sitting in an interest bearing account and there was a period of time that it was not touched, come up with some reasonable estimate of what the interest, even though we all know it's basis points on any type of, interest bearing account it was sitting in. But for many of you, cash flow deprived during that time, these funds could have been immediately used, and you report that. So you report no interest earned. Tax information, they're just going to make sure you have the right TIN. And the single audit information is a little bit confusing here. There's been a lot of guidance on this, and here's another one we could talk about for another 30 to 45 minutes. But all of you are aware that if you received in excess of $750,000, you will need either a single audit or a program-specific audit. There was just information that came out saying it would be, basically it was pushed out. So it's June 30th, 21, or year ends after that, the reporting is pushed back. And Everyone thought they were going to have it done this September. That's not the case, because really what they're doing is the audit is going to be performed based on what you put into the portal. But they ask you here for your 2019, 20, and 21, did you have a single audit? So you clearly could have had other federal grants and your CFA in excess of 750,000. So you'd say yes. And then they ask you within 21, all of them actually, but it'd only be 21, did any of those include the provider relief funds? And it's just more about gathering information, but this one, I think there will be a frequently asked question update because it is a little bit confusing. So here's another one, and we get a lot of questions on this. So this is informational purposes only for the federal government. They want to know, just for gathering data, what other assistance was received. PPP is one that many of you might have received. If you were a smaller size entity, for the larger ones, you might have received FEMA, any other HHS CARES Act testing, some of the local, some of the New Jersey and New York funding that came out. It will not have an impact on your lost revenue, on your unused or unspent provider relief funds. Again, it's merely just to gather information for the federal government. And really what they do, they have it's by quarter, and really everything in this portal is by quarter, and it's for 2020, 2021. You'll see the 8 columns for those 8 quarters, and a list down basically what we have right here of other assistance. If you do have any, populate it, move on to the next section. So here's really where, to me, where the meat starts to, the crux of this really starts to get pulled together. So step 6, so here's your expenses, right? And I say it over and over and over again. 3 words you need to remember for expenses: prevent, prepare for, or respond to the pandemic. So, some people ask mortgage or interest. You still were paying mortgage, you were still paying interest even before the pandemic. Clearly, you all know any additional expenses from social distancing, from sanitizing. If you expanded because of that, if you put on an addition, if you changed out some of your, some of your normal patient care rooms to ICU, clearly all those are incremental expenses that can be reported. And here is where they actually have you start to gather and populate that information. The important thing here is anything under $500,000 is just broken into 2 categories. Anything over $500,000, you have to break it down into specific categories, but they lay that out for you on the portal. And one important thing here, and I'll talk about it again with the lost revenue, and I'll jump ahead a little bit. So the lost revenue, any of those funds you can carry forward. So even if period 1 you had lost revenue that you did not use, you can use it for period 2, period 3, period 4. The reason I say that is the majority of you on this call, most of your expenses are going to be in period 1. Many of you will not have any additional expenses post June 30th of this year. You will have some. Now, the strategy around that is make sure to utilize all those expenses now and only use the lost revenue you need to make it up to the point so you don't have to send back any of that provider relief fund. Again, the reason for that is my assumption would be your expenses are going to decrease going forward, but your lost revenue you can carry forward. So let's use an example. You have, you received $1 million of provider relief fund. You have $600,000 of expenses, and you have $2 million in lost revenue. Some people might say, oh, well, it's, let's just use the majority of the lost revenue. Make sure you use all those expenses up now, because that remaining lost revenue can be used for future periods where the assumption would be you're going to have very little expenses on a go-forward basis, at least compared to what you had in the period 1 or that period of 2020. Step 7 here, again, just another way for the government to gather data. We think this is also going to be important, and if they will release more funds. So I'll use another example. You receive $500,000 in provider relief funds. You don't have any lost revenue. You have, $700,000 in expenses. So 500 in provider relief, 700,000 in expenses. You are going to put down, you know, the 700,000 in expenses, but only 500 of that can be used because that's all you received in provider relief fund. So that 200,000 of additional expenses that you did not get reimbursed for would go under step 7. So they're trying to aggregate how many expenses are still out there that aren't covered by that 150 some odd billion that was issued to date. Step 8, I think, is probably the most important thing, second to the expenses. Now, again, in step 8, it's going to be your lost revenue. I think everyone understands what the lost revenue calculation is, but we'll just go back over it quick. Basically, there's 3 methodologies. You can use actual to actual. 2019 is always your base year. You can use budget to actual, and we'll talk about if you use budget, what you have to do. Again, it'd be your 20 budget versus your 19 actual, or you can use a hybrid, or what they call option 3, and we'll talk about that a little bit more also. So lost revenues, and we just talked about this, and the one important thing here is, and we get so many questions from our clients that, so you're going to need to report 10 quarters, the 4 of 19, which is your baseline, the 4 of 20, and the 4 of 21. And they want you to break it out, and again, this is just patient service revenue. This is not PPP. This is not any prior 2017-18 cost report funding dollars coming in. It's your patient care revenue for those specific 10 quarters. And we get a lot of questions because they ask you to break it out by payer. And we actually were on a call with HHS, and they do not want you to go back and recreate. They want some breakout. There's some of our clients that clearly have this and their information systems provide it. We have others where they just get Medicare and other. And as long as you're consistent with your reporting of the breakout, to us, that's the most important. If at some point in time, and hopefully not, they do come back to audit this, you may have to break it down by additional payers. But at a minimum, we've been telling our clients, at least Medicare and other, if you can get Medicare, Medicaid and other, that's even better. The other important thing here, and I said it before, is, and this is critical, when they go quarter by quarter, there is no offset. What I mean by that is, you know, you had in quarter 1 and quarter 2 of 2020, your revenue had dropped 300,000 each quarter versus 19. So that 300 plus 300, there's 600,000 of lost revenue. Q3, Q4, it went the other way, and you were $200,000 over 2019. There are no offsets. And when it's calculated for you, it's only going to gather those negative or lost revenue quarters, if you will. So this is important. So even if you had really big months following, you know, you came out of the pandemic, Q3, Q4, those do not offset those lost revenue months, again defined as where your net patient service revenue in 20 was less than that in 19, or if you use the budget format, your budgeted amount was less than 2019. So really important, no offsets. And when you put this information in, it will calculate it for you, and I'll show you an actual snapshot from the portal in a second. If you could just go back one slide, perfect. So we talked about the budgeted revenue. We talked about the actual revenue. Again, it calculates this for you. Many people ask, so what is this alternative method? And clearly HHS comes out and says, if you use this, you need to write a narrative. The narrative needs to be approved, and it does create higher scrutiny. But there are a few examples where we think it's important. You know, if you had a budget in place in 2020, and the important thing I should have stated by that is it would have been approved by the 27th of March by a board. If you don't have a board, by a managing shareholder, by the principals, by your shareholders, by the CEO, etc., so that it was static and in place at that point in time, clearly, so you can't have a moving budget going forward. For those of you, maybe a June 30th or a September 30th, where you had a budget carried forward from the previous year, and then you said, well, our new budget isn't in place yet, that's where you could use sort of a hybrid of budget for a year, lost revenues based on the actual over actual for 2 quarters. We've seen a few clients do that. More frequently, it's the clients where either they brought on new physicians, they acquired new entities. We have an oncology group who, brought on new clinicians and also issued new drugs for some of their clients. So revenues went up. That, we think, is somewhat of a good reason why you could put a narrative together, because it really doesn't create apples over apples, right? To me, the important thing is that you're looking at 2020 versus 2020 versus 2019, same store. So any additions to that, which is distorting that lost revenue, it's worth writing a narrative, sending it in, and getting a response back from them. Next slide. So I know this is difficult to see. Hopefully you can print it out after and blow it up a little bit. But this is actually the reporting portal. And the reason I wanted to show you this was just so you get a feel for what type of data they're looking for. So the top just happens to be, this is page 6. This is where if you had unreimbursed expenses, where you would break it out between G&A or healthcare related. Again, they're trying to gather data to see what you didn't get reimbursed for. Below that, and this is exactly what it looks like. So this is just 19 and 20. The next page, of course, is, or the bottom of it, I think, starts the Qs for 2021. But this is the type of format they're looking for. So this is one of our clients that actually broke it out between Medicare and commercial. And as long as you're consistent throughout, that's the type of reporting you'll need to put into this. The other important thing, and I should have said this in the beginning, I apologize. If there's a question and it's a 0 or it's no, make sure you answer it. It's almost for those of you that did the PPP. You can't move forward until you answer the questions. The other important thing is you can always save and come back to it. So this could be a 3-day process. It could be a 2-day. It could be work on it this week, work on it next week. You're able to save and come back in at the same point. Next slide. So this is the last, so when you get to this point, it's a sort of a sigh of relief, except for number 11, but we'll talk about that. So the financial summary, and I'll show you a picture of what this is. The portal actually takes and aggregates all the information. It'll show the expenses you input. It'll show your PRF dollars that you received. It'll show the amount you can apply to lost revenue. It'll do the calculation. It'll either say, you have unused dollars that need to be sent back, or it'll come out to 0 because you had enough lost revenue and expenses to actually keep those dollars, which is clearly the key. Step 11 is somewhat of a nuisance. What we've told everybody is just to be consistent here. So really what they're looking for is, again, it's that same quarter over quarter, those 10 quarters, all of 19, all of 20, all of 21. But this is from an FTE standpoint. So they want you to break it out between full-time, part-time. They want you to break it out between clinical, non-clinical, contracted, furloughed, separated, hired. And each one of those rows you will see within the portal. Many questions around, is it the first of the month? Is it the end of the quarter? Is it the middle of the quarter? And what we tell everyone is, as long as you're consistent. So if you're going to use the last day of every quarter, make sure you do that for all 10 quarters. If you're using a point in time within the middle of the quarter, and that's when your system generates this information, the 15th of the last month of the quarter, as long as it's consistent, that's the important thing here. And the last piece though, that they're going to ask for is just for those facilities that have beds, they're going to ask for your inpatient, your number of beds, and then the last for your respective statistics. So it could be inpatient admissions, it could be outpatient visits, emergency visits, depending on the type of facility you are. Step 12 is literally a survey around, did you receive enough money? What did you utilize the funds for? There's a space to write a narrative if you want to. And it's really just an overall survey of more or less the provider relief, and did it help, did it not, what was it utilized for? On step 13, you're going to hit submit. And when you hit submit, again, back to that email address that's so important in the registration, you will get an immediate email that says you've submitted it. we've received your information. Sometimes it's a 20-second delay, sometimes it's 5 minutes. You will get the information then in a final email that says, you've gone through the process, you've submitted, thank you. We did have a client who actually, there had to be a glitch. We haven't figured it out yet, but they had wrong information coming back from what they submitted. The reason I say this is you then do have the ability, even though it says once it's submitted, it's locked in, you call the provider hotline and they will open it back up for you. So that's important to note also. Again, takeaways are everything's broken out quarterly. Make sure you answer a no, an NA, put a 0 in so that you can move forward, and really strategize around making sure you utilize those expenses you accumulated in the earlier stages of the pandemic, because you're probably not going to incur those as frequent going forward. And if you had ample lost revenue, you can keep that in your back pocket and use it going forward. It never goes away. And again, each period that you go and report in, the other thing we would assume here is as your volumes and your revenue gets better, you might not have that additional lost revenue going forward, period 2, period 3. So they allow you to utilize that lost revenue that you generated in period 1, which is great. So a lot of information. Oh, and I almost forgot. So here is, and this is important, and again, apologize, hopefully you can print it out, but where it says PRF summary, and the portal does a nice job. So it basically takes and it says, okay, here's how much your PRF or provider relief funds you received, and it goes through each one of the sections. Did you return any? No, so you still have that same dollar amount of the $69,000. Clearly, nursing home has a lot of separate areas in this. There were separate dollars, and there's separate reporting for nursing home and any infection control payments. And we could go into that at a further date. And then going down, it calculates your lost revenue. So in this situation, our client had almost $380,000 of lost revenue. They had received $69,000 in provider relief. And then you go down to the reconciliation. They also had $6,000. Does it have it here? It does not. There it is. It has $6,000 of expenses. So clearly between the $6,000 and the $379, it comes down to the last line. It says unused or other PRF after lost revenue reimbursement, 0, which clearly means that they don't have to send any money back. Now, if their provider relief funds were $500,000, they would not have had enough to cover, and there'd be a positive number. And on the portal, there's actually directions of how to send the money back. We're hoping none of you have to do that, but if so, there is a way to send that money back, and there's instructions on that. Now that I think is the last page, and hopefully now we can get into some of the questions. Took a little bit more time, but we still have 30 minutes for questions out there. And feel free, there's no dumb questions. This is confusing for everybody.
Sorry about that. So a lot of questions came in. I'll read them all. Dominic, I apologize if you already answered them, but I will still just go through and see if they'll be helpful. Okay, so if you are not a hospital, a laboratory, and do not have the same metrics, personnel, patient, facility requirement, what should be reported? So they do not see patients, they're only a testing lab.
So in my case, you'd still have the FTE requirement, and it'd probably be tests, number of tests that you perform if you're a lab.
This was around, I think, step 4 or 5. They asked, how does PPP forgiveness interact with this program?
So great question, a lot of confusion around that, but in the FAQs back in March or April, PPP separate and apart. They ask you to tell how much money you received, but it has nothing to do with it other than, and I should have mentioned this, and this is very important. Clearly with the expenses, you cannot double dip. And what I mean by that is you can't use the same expense twice. Fortunately, the driving factor for PPP was payroll, and the driving factor of expenses for provider relief fund is non-payroll. But do make sure that you look at your forgiveness application, and if there was any expenses on there that non-payroll related, that, you know, but PPP was pretty straightforward. It's mortgage, it's interest, it's utilities. From a provider relief standpoint, those dollars and costs you were going to incur regardless of the pandemic. So more on the side of FEMA. So if you did receive any FEMA funds, make sure you don't double dip in any of those expenses. So the expenses for provider relief have to be strictly for, and you cannot have been reimbursed for those previously. Just as an FYI, we have a bunch of clients, critical access hospitals or cost-based reimbursement, completely different story because they're already getting reimbursed from the federal government. But good question, and I should have mentioned that prior.
Our next question, I'm not sure. So they said, does federal sick for COVID get entered here? I'm not sure if it was federal sick leave.
No. You know, I need to double check on that for you because that is federal assistance. It could be under other. If you want to email me, I can get back to you with the answer on that just to make sure.
Is reporting done on a cash or accrual basis?
So what they recommend is that you are consistent with how you report normally. So if you've been a cash basis, you should report on a cash basis. If you've been accrual basis, you could continue to report on accrual basis. One thing we did get clarification on, we do have a cash-based client who reached out, who actually purchased an item specifically pertaining to the pandemic. Now, clearly, since they're cash basis, they didn't accrue for it, but we did get guidance from HHS since that they went through the PO process, they just hadn't received it or paid for it yet. They could include those expenses. So a little bit of a hybrid in terms of if you acquired something, if you've gone through the process and if you normally would have accrued, but you happen to be cash basis, you could utilize that. Otherwise, everyone that we've recommended this to strongly recommend, you know, however you're reporting, do not all of a sudden change the reporting basis. It could draw a lot of red flags.
Okay, the next one is, how is Medicare Advance / Accelerated Payment, MAAP, handled for reporting?
So another good question. So for those of you that recall, it was back in April of 2020, Medicare put a loan out, some almost $100 billion to, you could get up to 6 months worth of your Medicare payment. It was really a cash flow lifeline, if you will. Now that is completely separate and apart. That is a liability. There's repayment terms on that. Any of you that received it are already paying that back. You do not have to put that in there because that's not a grant. That was truly a loan and a liability. So we're not even having our clients put that in under other assistance received, and it has nothing to do, or none of the information from that or from those dollars you received should have anything within this portal. A good question.
Next one, when entering our PPP loan in the worksheet, it shows up in red numbers. Is there something wrong?
No, because we had a client, the same thing. No, absolutely not. I've seen that, you know, that's an interesting question because I saw it in one portal and I didn't see it in the other. Again, that section though is strictly for informational purposes only. So I think you're okay there because I did see it one other time.
Okay, next one, a provider does not have a 2021 budget approved by March 2020. How should this be handled?
So the first thing I would say is you could, option one is the actual over actual. Now, if reading into this a little bit more, if they did have a budget approved for 2020 and they use the budget versus actual for lost revenue option 2, then I would actually use option 3. I would use, and again, this is my assumption, those 4 quarters of 2020 budget versus actual, and then use the first 2 quarters of 2021 actual versus actual. And when you write to HHS and say, this is exactly the reason, we had a budget in place, we followed along, we didn't have a budget in place for the first 2 quarters, so we are going to ask you to allow us to use 2 different methodologies to come up to cover those 6 quarters.
All right, I'm not sure, I think that you answered this one, I just want to double check. If you used expenses for PPP forgiveness, can you use the same expenses for this reporting?
No, again, very important, and shame on me for not mentioning it, but you cannot, clearly in all of the FAQs, these expenses have to be true and not reimbursed from any other source for provider relief.
Right. This is a longer one, single audit question. Client received in excess of $750K when combining periods 1 and 2. Expenditures and lost revenue was spread out between 2020 and 2021, such that each calendar year, which is also the client's fiscal year, is below $750K. Is a single audit required for either year? If so, which document clarifies this?
So I'm going to preface this by, I am not an expert in this area by any means, but please email me after. But my understanding is the way this is going to work is you could have, and I'm just going to use an example, you could have received $2 million in aggregate of provider relief funds, but not one of those payments within any of those specific periods were in excess of $750,000. Then you will not have to, then you don't have to perform a single audit or a program specific audit if you don't have any other federal grants. So I'll even back up. Period. So the way they're going to do this reporting is it's going to be by period. So if in period 1 you had, $500,000, then you do not have to report, or you don't need the program specific audit because it's less than $750,000. Period 2, you had 725. Period 3, you had 600. None of those will qualify because, again, they are going to go back in and audit from what is put into the portal. So the key takeaway we always say is each payment stands on its own within that reporting period, and you could have an aggregate of all of your payments in excess of $750,000, but still not have to include those dollars, or still not have to have a program specific audit. Now, clearly, if you have other federal grants, you would have to include those dollars within for that specific period of time. But if you'd like to email me, and I can get you to one of our audit partners who is much more of an expert than I am, but the key takeaway and the guidance that came out was it's based on that the specific period. So back to that specific date of receipt for each one of those funds.
All right, the next one, a TIN has both targeted and general funds. You want to report general at parent. Do you take an apportionment of the lost revenue for that TIN and report in parent?
Read that one more time.
I'm not sure what a TIN, but a TIN has both targeted and general funds. You want to report general at parent. Do you take an apportionment of the lost revenue for that TIN and report in parent?
Yes. So the tax identification number, because the targeted distributions have to stay with the entity that received it, that's why they received it. The general can go back to the parent. And I think what the question is, and again, you have my information to email it, but I think the question is, can you take an apportionment of that general distribution from within that specific TIN of lost revenue and send it back to the parent who is reporting on that general distribution? I'm pretty sure the answer is yes, but I want to double check on that. That's a great question. And when you start to get into some of those, they get a little bit tricky.
All right, next one is we didn't receive our first PRF payment until July 2020 with a second payment in December. We have until March 2022 to submit our reporting. Is there a benefit to reporting sooner if we've already used the funds properly? Just thinking if there's a stage 4 of payments, we don't want to miss out on that opportunity.
So, and here's another one I should have mentioned. So the positive of the post payment notice that came out June 11th was that it gives people additional time to utilize these funds. Oh, sorry, I think I have a fire alarm going off. But basically what it does though, it allows you to then, unfortunately, you cannot report on those funds. So you have to wait until that period of time for those funds to actually be utilized. So the good news is that you're able to utilize them in a longer period of time. The bad news is that you cannot report earlier. I apologize. I don't know why I have a fire alarm here. Hopefully it's not too distracting. I'll put it on mute until, sorry.
Okay, it's not too loud. So the expenses that are reimbursed, do they have to be as a result of Corona as in new expenses?
So read that one more time, I'm sorry.
That's okay. So the expenses that are reimbursed, do they have to be as a result of Corona, as in new expenses?
Yeah, so, I always say there's three things: prevent, prepare for, or respond to. The other way to say it is any incremental expenses related to the pandemic. So think about it. If you incurred those expenses because of the pandemic, absolutely. If it's just another expense that you would have incurred if we didn't have the pandemic, then no, that cannot be included. So two different ways to think of it: prevent, prepare for, respond to, or incrementally related to those costs associated with the pandemic.
On personnel metrics, headcount or FTEs? It wasn't specified.
So I believe it's FT, if I remember back, it's part-time and full-time. So it's going to be headcount because they're going to ask you to break it out between full-time and part-time. And, I should have included it here, but you can Google or just, PRF post-payment notice June 11th. And it's a great document that really goes into detail of exactly what you will need. But yeah, it's headcount because they're going to ask it between full-time and part-time.
Okay, next one. Will they review if reported in the portal matches tax return? Our EHR has other things included, such as write-offs we cannot get out of our reports by payer mix, creating a different total for 2019 and 2020 compared to actually received.
So we've had some clients, and what we've said is as long as you're consistent with your reporting, we've had others where there's some write-offs that would go against the net patient. Cash basis, we've actually had them try to tie back and reconcile to their tax returns. And if there's a difference or a discrepancy, we've had them put together a work paper to support that. So upon audit, you can just say we were consistently reporting for these 10 quarters, so all of them are apples versus apples, and here's our reconciliation because we couldn't receive this. So again, you just want to have supporting documentation, and you want to make sure you have consistency for those 10 quarters.
All right, next one. Should Medicare and commercial insurance be reported quarterly for 2019 and 2020?
So if you're, and here's what we say to all, if your information system allows you to report out in that detail, absolutely. If you then have to go and, the perfect scenario would be you report it in those 5 or 6 rows or categories that they request. If you need to go back in or call your vendor to try to get the information, then we've been telling our clients to just try to be consistent. If you can do just Medicare and commercial, or Medicare, Medicaid, commercial, or Medicare and other, as long as you're consistent over those 10 quarters, because really, if you take a step back, it's not going to change the bottom line, right? The bottom line is what's used to calculate the lost revenue. If they want to come back and ask for further breakdown, you can provide it at that point in time. But breaking down between all the different payers isn't going to change your aggregated total per quarter. So don't go and try to recreate and regenerate and spend all this time trying to get it broken out. It's the aggregated net patient revenue by quarter. That's the most important, and then break down in whatever category of payer you can.
All right, next one. Do we need to upload a backup file to justify the quarterly revenue data? If yes, should this be from a P&L versus a report from a billing system?
So no, fortunately, it's just data input, and then it calculates everything. Again, strongly recommend make sure you have a work paper supporting it, either from your billing system, from your reporting system. I'd recommend, putting a file together, a folder on your laptop and your computer specifically for PRF. Here's all the supporting documentation, but you do not have to upload anything. It's strictly data input.
Okay. If a company closed after applying for third round of funds but received funds after they closed, can they use loss of revenue prior to receiving the funds against third payment?
Can you read it one more time? I'm sorry.
Yep. If a company closed after applying for the third round of funds but received funds after they closed, can they use loss of revenue prior to receiving the funds against third payment?
Can you, whoever wrote that, can you just email that to me, because I want to make sure I get the answer right, because there's a few things there. One, it's you receive funds after the fact and you're no longer in business, I don't even believe they'll allow you to keep those funds, but you applied for them when you were. I don't want to give you the wrong advice. If you could just email me, I'll get you back an answer on that, because that gets a little bit tricky.
Next one, what about double dip of loss of revenue for ERTC and HHS?
So you shouldn't have, so separate and apart. So, I mean, the ERTC is just showing a 20% drop in 2021 versus that same basis of 19. ERTC for 2020, it's either partial government shutdown or a 50% drop. Even though the calculation seems a little bit similar, it's separate and apart. You know, one comes from the SBA and one comes from HHS. So the two are separate and distinct, even though the calculation is somewhat similar. That's a really good question, actually.
We have a group that acquired 2 new facilities in 2020, such that their revenue loss 2020 versus 2019 was not off by as much because of the new acquisitions. Should we use budget versus actual in this scenario to report the lost revenue?
So the only way you could use budget now, if your budget was approved by March 27th and that budget did not include those acquisitions and that budget stayed static, and even though your actual potentially went through the roof, that would be advantageous for you to use that. If not, if you didn't have a budget approved by March 27th, then I would actually use option 3. And in the narrative, I would say that I'm not creating apples versus apples because we had 2 acquisitions. So clearly our revenue good is going to be up. Same store versus same store shows X. So we would like to use this methodology, which is option 3, to generate lost revenue. And I think that's a great example of they should allow, but we've had mixed approaches and mixed responses. The key though to that one would be, if you did have a budget approved and that budget stayed static for the full calendar year, you weren't aware of making those acquisitions, clearly your budget's going to stay flat, your actual is going to go up, but if you chose that budget option, that would work in your favor.
Okay. Can you clarify how a nursing facility factors in Medicaid payments can you clarify how a nursing facility factors in Medicaid payments in a cost reimbursement state?
So that gets a little bit tricky because again, that means if it's cost-based, you're already getting paid for some of these costs that you're being reimbursed for costs that you've already submitted. That one gets a little tricky and we'd have to go offline on that one. And the nursing homes also are a little bit different because if you received any of those that are outlined as infection control, which many of the nursing homes did, they have a little bit of different standards of what you can and cannot use. But if it is cost-based reimbursement, we'd have to go back and dig through it a little bit more because really what they're saying is those costs that you submitted to increase your reimbursement, you're already getting paid for, so you can't go ahead and use those costs again. Happy to help you offline on that because that one gets a little bit confusing.
Should we add HRSA payments for uninsured COVID patients or suspected COVID patients under the other HRSA payment amounts?
Yes, and for those of you that aren't aware of that, that's the uninsured portal that I think almost $2 billion was paid for. So for any of those, basically the government didn't want you to turn away patients for COVID testing or to take care of COVID patients who were uninsured. And you were able to submit those into the uninsured portal and be reimbursed at a Medicare rate. Yes, whatever that aggregated amount is, I would include as other federal assistance. Absolutely, good point.
Can you carve MAAP out of revenue?
Well, the Medicare advance, and I'm not your accountants, but the Medicare advance was a liability, so it really shouldn't have been included in your revenue because that's a loan that was to be paid back. So if that was accounted for correctly, it never should have hit revenue because you have to pay that back over a 29-month period. So it shouldn't have any impact on any of this, but go back and talk to your advisors, your accountants, etc.
Do we need to now only complete data for this reporting period and not all the other quarters?
Yeah, so as my house was burning down, but actually it didn't. I let a 9-year-old make a grilled cheese. That was a mistake. You basically, so you have to wait and report those in specific periods. So again, unfortunately, you can't go ahead and report period 2 or period 3 and period 1. You now have to wait and report based on that date of receipt. That's your reporting requirement deadline. And you can't go into that portal and put those funds in until that opens up. And it's going to open up 90 days before the reporting cycle. So we assume January 1st for the March 31st is when the portal will open for period 2.
Okay, and the same person said, I assume also the regular ongoing expenses can be submitted for expenses.
Yes, absolutely. If you're still incurring expenses, absolutely. Again, any incremental expense because of the pandemic or because of COVID-19 or anything to prepare for, respond to, or prevent. And you can be creative in that too.
Do HRSA payments for charity care and uncompensated care patients with a COVID diagnosis seen by a physician in a hospital and paid at the Medicare rate have to be reported as other assistance?
Yes, that's back to that other. So that's the other point where they submitted to the HRS uninsured portal and received Medicare payments. Yeah, that is considered a federal assistance. Again, it's just for informational purposes only. But yeah, if you can come up with an estimate of what that is, that should be inputted into the portal.
Okay. Is United Healthcare Medicare considered traditional Medicare or commercial?
That would be commercial. Traditional Medicare would just be your straight fee-for-service Medicare. There's many other Medicare Advantage, Medicare products out there, but many of them are under another payer.
Okay. Do we have to include PPP and MAAP in single audit calculation?
PPP in the single audit calculation? No, because those aren't federal grants. One's a loan and one is separate and apart. So again, not 100% my expertise in that area, but reach out to your advisors, accountants, but my initial thought is no. Those aren't federal grants that you have to report through CFA and on a single audit.
Okay, next one. How about rental payments while office was shut down? Are those expenses includable?
What was that? So rental payments for?
While the office was shut down. Are those expenses includable?
Unfortunately, no, because those rental payments were going to be made irregardless of the pandemic or not the pandemic. Now, if you had taken on additional space because of social distancing, those incremental rental payments could be utilized. But again, normal course of business, you're paying the rent irregardless of what happened. Unfortunately, maybe there's some other funding source out there for that.
Thank you. And then what was the phrase that you were saying? It's prevent, prepare.
So yeah, prevent, prepare for, or respond to the pandemic. So that's how I always think of any type of expenses. If you use it to prevent the pandemic, prepare for the pandemic, or respond to the pandemic. Those 3 words, you can almost apply any expense against it. And if it fits within one of those 3, that's a valid expense to use in the PRF.
Okay, thank you. And we have 2 more questions. How would you handle increases in Medicaid rates when comparing 2019 to 2020 revenues when reporting under option 3 for lost revenues? Services decreases, but some offset due to rate increases.
I think that's going to be a tough one to justify because unless you had a specific rate increase, everyone else is going to be in the same boat. So year over year, there's always some type of rate increase. I think that one may be difficult. Again, I don't know specifically, but if it was certain CPTs that were increased or certain E&M levels or just overall specific to your provider situation, potentially. But if it's just a normal ubiquitous increase across the board, then I would say no.
Okay. What is the due date for the first time single audit if we have a calendar year end 2020? And what does a single audit entail not having ever done this?
So again, I'll preface, this is not my area of expertise, but, and what did they say the year end was? 12/31?
2020.
So I would assume 12/31/2020. So you will not have to undertake this. So it'll be your 12/31/2021 year end. They will go in and look at what you submitted in period 1. And if you've never had a single audit, that means that you've never had federal grants in excess of $750,000. You'll need what's called a program specific audit. And it's usually 9 months after the year end. So we're talking probably September of 22. And the program specific audit is a lot easier than the single audit. The single audit is much more around controls, around environment. The program specific will be specifically around this provider relief. And it also depends if you've had an audit before or not. Basically, and this is really, I'm gonna make it very basic, but the program specific audit will go in and audit your expenses and lost revenue calculations within the portal. So the portal is the base for what these program specific audits will go in and look for. So whoever your accountant will be that will perform this, they will go in and then they will request the supporting documentation from you for the expenses and from your calculation around lost revenue. But it won't be, your 12/31/20 was pushed off. So if you're a 12/31/21 year end, you're looking at September of 22. So you definitely have some time.
Okay, and we have a few more, but I'll have this be our last question as it's almost 2 o'clock. But everyone, please feel free to reach out to Domenic. And he also will get a report of everyone's questions so he can reach out if there's anything that we missed. So the last question will be, are you saying that uninsured payments received from HRSA gets listed under other payments received worksheet?
Yes, because it came from HRSA. It's part of the CARES Act. So that is other federal assistance. If you have it readily available, again, this is more of a data gathering for the federal government. If for some reason, it's going to take a long time to aggregate that, I would put an estimate because it's not going to have an impact on your lost revenue or your expenses. It's more just them looking for gathering data while they have this portal open of other assistance received.
All right, great. Thank you so much. Again, Domenic will reach out if there are any unanswered questions we weren't able to get to. But thank you, everyone, and have a great day.
Thank you, everybody. Take care.